Good afternoon. I hope you're not sleepy because we're going to tackle a really serious topic. So we've heard about housing for students, we've heard about housing for low-income groups, but just from a show of hands, who has considered housing for displaced populations? Who here has looked at that as a viable investment? Just from a show of hands. One person in the room. So it's quite telling. Today in Africa, we have over 30 million displaced people in the region. So you can imagine housing is a key issue, particularly when we talk about displaced populations. For a long time, it's been considered a humanitarian issue. Let the humanitarians deal with it. That's aid. Nothing to do with development. We've seen what's happening in the wider sector today, with funding dwindling down and the level of displacement also rising. So humanitarian solutions are not scalable. I can tell you I've worked in Somalia, now I'm working in Nigeria, and one housing unit comes to a cost of $5,000, and we have 3 million people displaced. And these housing units are not they're not long-term. They're usually set up for up to 5 years at most. So it's a really important topic, and this is what our panel is going to tackle today. How the right mix of blended finance, risk sharing mechanisms, and innovative partnerships can really tackle this issue. So I'd like to welcome onto the stage my 3 panelists. We're gonna have Ahmed Baba, from Family Homes Fund in Nigeria, and he's going to talk about Family Homes Fund's own experience with using blended finance as a de-risking tool. Representing Somalia, we're gonna have Mr. Abdi Hamud, the Senior Advisor to the Ministry of Public Works and the Head of the Projects and Special Programs Unit. And he's going to talk about institutional reforms in Somalia. Both Nigeria and Somalia actually have over 3 million people displaced. So that's a similarity that they both share. And then from a global perspective, we will be joined by Sara Veronesi, the project manager at the Affordable Housing Institute, a non-profit impact consultancy. And she will talk about alternative housing models that go beyond ownership. And that could be options for internally displaced persons. Then finally, sorry, we're actually 4. We'll have Glen Jordan, who is the co-founder of Empowa. And Empowa is a trailblazer in using technology and innovation to unlock housing finance. And he's going to talk about how we can use data and digital tools to de-risk investments. So thanks so much, and we're looking forward to an interesting conversation. We all know this is a sector that not many of you are familiar with, so feel free to keep all the questions for the end. Thank you. So maybe we'll start with Ahmed.
Good afternoon. My name is Ahmed. I work with Family Homes Funds Limited in Nigeria. As indicated, when Shezane asked who has thought about IDP housing, and I think just one hand went up. For us, a housing finance institution that is impact-driven and also trying to sustain itself financially, delving into the IDP space is something that we had to think through thoroughly. However, my presence here, the involvement of family homes, is a clear indication that there is an opportunity in IDP housing. I'm no stranger to my panelists here. We've been on this journey for over 12 months. The first time Family Homes was invited to a roundtable by the United Nations to discuss housing solutions for IDP. We were invited based on our involvement in the housing space. We had previously funded housing development in certain states in Nigeria, and they felt that our experience as a housing finance institution was critical. So we've been on that journey with the development agencies. Our role there is as a housing finance institution and a funds aggregator. Millions of Africans are displaced currently. Nigeria alone hosts about 3.5 million, which is about 10% of IDP population in Africa. For these displaced persons, a home is not just a roof, it is a source of stability, peace, and foundation for rebuilding their lives. Unfortunately, traditional housing finance models have failed to adequately provide or serve to this group of people. Reasons are there. They are high risk perception, limited repayment capacity, just to list a few. For investors and lenders, these conditions make projects unbankable. And for the development agencies, grant funding cannot meet the scale of need. And this is where blended finance comes in, as a bridge between impacts and financial sustainability. With the adequate blended structure, losses are absorbed, projects become bankable. To cite an example with family homes and how blended finance has been able to impact a specific demographic, we recently launched a mortgage product where we blended grant funding from the federal government with concessional debt from the African Development Bank. These funds were commingled with private investment from the private mortgage institutions. I'm glad to say that the interest rate for this particular mortgage product sits around 10%. Nigerian commercial rate is about 30%. And this is a clear indication of what blended finance can do. But in the same principle, in developing the conceptualization of the IDP housing solution, we applied the same blended finance principle to enable us provide affordable homes for the IDPs. We focused on 4 key areas. The first being strong institutional coordination, which is being represented here. Secondly is policy advocacy and regulatory support from the government. The third is we're leveraging on technology for aggregation of information, profiling of potential homeowners, and also in building technologies as well. Lastly is the skills acquisition. Just to go off the last question that went to Mr. Jackson, yes, it is very, Mr. Jackson's comment, it is very possible to concern yourself and do something about income. A key element of our program is empowerment, skills acquisition for these people. So after profiling them and being able to tell their affordability level and status, you can also engage them and uplift their skills to ensure that repayment of these loans are almost assured. So the opportunity before us is clear. We are seeing housing not from a charity perspective, but from an investable, scalable perspective. We hope to create systems that empower people and communities to enable these displaced persons build with dignity and hope. As we engage, I would want you to please open up your minds. Let's come together, let's partner, let's ensure that no one is left behind, even those displaced through circumstance or conflict. Thank you very much.
Thanks so much, Ahmed. So, Mr. Abdi, would you kindly take us through what kind of institutional reforms the Somalia government is focused on, particularly when it comes to housing, as Somalia also has one of the highest displacement figures in Africa?
Yes, thank you very much. Shezane, yes. And actually, during my panel discussion yesterday, I think I mentioned it a lot about what's going on in Somalia. and what's happening on the ground. Before I go into deep discussion, I will try to enlighten you about the current situation in Somalia. Actually, Somalia faces we incorporated the IDB situation in the National Transformation Plan and also into durable strategy and national housing and urban sector in 2025 and 29. There is a rapid urbanization in Somalia, about 45% urban population growth and high growth rate. There is also unplanned urban expansion and haphazard sprawl and strained infrastructure systems. There are almost 2.6, around 3 million internally displaced people, and the displacement is very common in Somalia because of it's caused by the clan conflict, clan dynamics, climate shocks, economic instability, and there is 70% population below poverty line, and there is also a widespread informal settlements and slums like. And when we come to the government, as the senior advisor of the minister and the head of the programs and projects, we are continuously do institutional reform. And so there was some policy framework on displacement within Somalia 2014 and national policy on refugee returnees and IDBs 2019. I think, and also the land distribution to refugees, national durable solutions, and also there are some strategic plans. There's always gaps in the legal framework because of all the government benchmarks were destroyed during the civil wars in the last 35 years. So there are always gaps, financial gaps, legal gaps, capacity development gaps, and also a very limited donor contribution. And there's no also financial institutions because of the high risk entailed, also because of the no guarantee situation from the government. And actually, there are some also programs of facilitating affordable housing and, for example, leveraging community strength, enabling access to home estate land and tenure security, enabling finance. Yes. Yeah. I need to continue. No problem. Okay. There. Yeah. Excellent. Instead of doing that. And actually, there are a lot of ongoing on the ground, and thanks to God because Somalia is coming back, as it was in 1960s and also 1970s and 80s. They're coming back with determination, and the security now is restored on the ground, and the IDB protection also is ongoing in collaboration with the African Development Bank, in collaboration with IOM, in collaboration with the UN. And at the moment, they are building a lot of IDB and shelters for almost 20,000 in certain areas in Dolo, in Jubaland, and also our target is 120,000 shelters. In order to make this realistic and also feasible and tangible, what we are doing is we engaged a young Somali engineers. It's called Youth Architect Competition, and they designed shelters also and with the local producing materials. We are also promoting, because we have a lot of raw materials and natural resources, then we are promoted to make a local productions, to enhance the local productions. And they made a very good designs. And then in next month we are going to hold also a competition for the best design, and then they will select 3 designs: people from international community, people from Somali government, from universities, a large stakeholders are coming together so they can select 3 IDBs, the best designs, and also the cheapest and design that they can implement, they can construct. And I think hopefully this will contribute to the IDBs and also to the sustainability and to the future of this community. So when it comes also to housing, Somalia affordable housing mission, we have a mission structure, we have also implementation tools, we have also key functions, and also phased rollout of pilot projects. And I will not waste your time with this presentation. I know where you are looking at, because you are also, most of you came from financial institutions and also investors, and most of you came from, and that's where I will take you. So for innovative housing, for example, we have rent-to-own housing scheme, we have housing loan interest also subsidy scheme, microfinance linked housing assistance scheme, and also housing material assistance schemes and incremental housing schemes and community group. And also our target also is enabling access to housing finance, setting up national housing fund, or maybe national housing bank. Maybe we will get also some support from the Indian National Housing Bank. And we had also the opportunity to have a side discussion how to establish a national housing bank and this kind of thing. And bank liaison for affordable housing. We have also a very important diaspora groups who are contributing a lot into the housing market. And also, maybe we will enable microfinance group for housing and facilitate use of saving for housing. And Somalia housing, affordable housing mission also is to have sustainable materials and technology. So, as I mentioned before, most of the materials need to be produced locally to reduce the costs and also to make it affordable for many people. I think that is the institutional reform we are seeking, and this is a great opportunity also for the Somalia government to link with Shelter Afrique, with banks, with financial institutions, and there is all, as I mentioned several times, there are a lot of financial institutions also who are very interested to invest in Somalia. And Somalia government is ready also to give guarantees in the future, because already the petroleum production already started. The space and there are huge constructions and also housing and affordable housing. Also, the first space station also is already started building it. So this is a great opportunity for you to jump in and to take your chances with the housing market in Somalia. And thank you very much.
Thank you so much, Ahmed. I think that's really important in terms of the government is ready and is willing. You just need more investors to look at how to provide affordable housing for IDPs. So we'll come to Sara. I know we've been talking about ownership, but there are alternative models to which IDPs can access housing. So it would be interesting to hear from you on what your research is showing you. Going back to also some of the points raised by Ahmed on the importance of livelihoods, particularly when it comes to displaced populations.
Thank you very much. And yes, I think it's very inspiring when projects that promote access to home ownership for IDPs become a reality, like in the case of family home funds. But as we know, there are a lot of challenges and barriers in accessing home ownership for vulnerable groups, including IDPs. And so I think in a lot of cases, rental housing can come in as a relevant solution to address the housing needs, not necessarily of all the IDPs, of course, but of some of them. especially I think in supporting that transition from the initial phase of relief when they're looking for emergency shelter into one of actual recovery. And at the moment, for example, we're working mainly in 2 countries where we're focusing on IDPs. So one is a non-African country, so it's in Ukraine, where we're working with the French Development Agency, and one is Ethiopia, where we're working on a study for the IFC. And in both cases, what we're seeing is that, especially in the initial years of displacement, there is, of course, a strong desire from IDPs to eventually be able to return to their original place of residence, but in a lot of cases, this is not possible, like, at least in the short to medium term, due to the persistence of the causes of their displacement. And so I think in these cases, especially for urban IDPs, rental housing can offer that flexibility to allow potentially in the future for a potential return, while also allowing to overcome or at least work around some of those barriers of home ownership. And I think in a way this is somewhat proved by the fact that the majority of IDPs who are not living in organized camps and who are living in those communities are already living in rental housing. So they themselves have already adopted this as a solution, but of course we know that they are facing a lot of challenges even with this type of tenure. Some of the common approaches are either to provide accommodation for free without having to pay rent for a certain period of time, or providing a rent subsidy, cash for rent assistance. But of course, this has a limited duration and is again dependent on donor funding. So it's something we discussed before, that the key element is coupling these investments, of course, with also support for the livelihood of the IDPs. And I think, yeah, this is a key element that can allow for longer term sustainability of these models, and eventually allowing for a greater integration of IDPs in the communities. Thank you.
Thank you so much, Sara. So Glen, you have the interesting task of letting us know how data comes in and how the use of digital tools can de-risk investments that we've been talking about, because the one thing that we keep hearing is the risk. When it comes to investing in housing for IDPs, the risk is too high. So how can we use data and digital tools, and how is Empowa actually doing that?
So yeah, thanks very much. I think IDPs really represent at the extreme end of the continuum informality. So actually, if we think about it, this is an informality issue, and that's the bigger issue that we've all been discussing in the room today. So if we look at traditional finance as it currently stands, we've spoken a lot about capital requirements, but capital requirements are very formal, very structured, even if blended, put together. And so really, technology and data enables us to transition that language between that of the informal sector, because the informal sector is unstructured, intermittent, variable, and nothing is there. So we have to make that, and it's invisible. So the whole point around it is, how do we make that visible? So what we're seeking to achieve, what we are doing is, really we're the translator. We're a talk. We're enable the ability to talk between capital, the formal capital, and the informal market in such a way that they can start to understand each other. And that's key to unlocking the finance. It's key to unlocking how people behave, or how they behave, whether that is sustainable, not sustainable, whether people are paying, what they're paying. All of that kind of data starts to build, and that becomes valuable for that. So it enables us to start wherever people are, so to meet them where they are, and then take it from there and grow it from there, as opposed to what we often try and do is force them to be in a place where they're not, which is why we get the results that we currently got, is because we're not speaking to each other. So if we can utilize the technology to build the data, to build the systems, to build the controls, and it's not only data, but the new technologies are enabling us to innovate in the space in ways that weren't available to us even 10 years ago. So the innovation in the technology, the innovation in which we apply the technology, enables us to distribute funds, manage funds, without having to audit those funds, without the third-party audits, etc. We can prove the data. We have immutable, timeless data available based on cash flows, based on transactions that can become immediately available, which is music to capital's ears. This is the kind of data they're looking for. This is the kind of feedback that they're seeking in order for us to de-risk this. So, and this is the mechanism by which we can do it, and these are the tools and resources that enable us to translate these requirements going forward, and this is the joy of what we can do. And that's the point. We often talk about what we can't do, but this is about what we can do, even at the extreme end of informality, not just in the middle formality, which is where most of the world sits in the cities.
Thanks, Glenn. I like that. Meet people where they're at. So we'll open it up. Are there any questions in the room? Yes.
Glenn, I'd just like to ask you for some practical examples. How do you go about, how do you do it? I mean, it sounds good in theory,
yeah,
but just talk to us and make it real.
Okay, because of our current structures, particularly for housing, are based on formal payment mechanisms on particular days, okay, particular days and dates. If we take a mortgage was an industrial age product designed for when everybody earned a salary and got paid on the 25th of the month and the debit order went off on the 26th. There are very few people in the world, even in the developed world, who are earning like that today. You know, the gig economy is taking over worldwide. So how can we enable payments to happen as and when, and how do we record those payments? And how do we record those mechanisms? And how do we translate the risk of that? So it's how do we turn the risk around? So instead of it being a loan, it's a savings mechanism. So if we look around the continent, self-build is the biggest way of building right now. We can create financial products that are the equivalent to self-build, but that are moving into structures, already built structures. So in other words, there's a rental part and then a capital contribution part, as opposed to the mechanism that we've currently got, which is interest plus capital. So again, it's around, that's what I'm saying around, so it's a flexibility of payments and the ability to meet that flexibility where the capital, what capital needs. So, and how do we de-risk that? So what does that look like from a de-risking perspective? That's another whole issue, we often say we can't lend to informality, to informal market, because we don't have the data. But we're not going to get the data. So the point is how do we then do it without the data? How do we look at the risk and say, how do we build that risk in moving forward? And then mechanisms to do that and the technologies we can utilize to do that as well, in terms of looking at that. And obviously there are also new tools now in terms of assessing data, you know, such as the mobile data, etc. So we need to assess risk completely differently, but in a way that's understandable, that capital can understand, and we're reducing it for capital, while at the same time meeting that flexibility of intermittent income. So to give you an example, there are a lot of our payers who will miss 2 months, 3 months at a time of payment. But because they've made it up, when there was good times, they're allowed that flexibility. And you can provide for that flexibility. And that requires new systems and new ways of managing. And that's where the tech is amazing, because it makes it cost effective. It's not costly. You're not having, you know, auditors, et cetera, to do that. The tech can manage that very cost effectively now. That's what it's good at. And so let's utilize tech for what it is good at. And that is cost reduction, efficiencies, and effectiveness, and audit capabilities of transactions. So we can validate transactions and validate impact without having to send external consultants to fly out and do expensive audits and tick boxes, et cetera, et cetera. That's the kind of mechanism that we're talking about.
Yeah. And maybe just based off that, Ahmed, borrowing from what Glen was talking about, what is needed, specifically like in Nigeria, to scale up some of the blended financing mechanisms that you guys have already started setting up, particularly when it comes to addressing the housing needs for IDPs? You're surrounded in a room by investors, so what is needed?
Like Glen said, technology basically, to formalize the informal sector. A lot of the IDPs, the informal sector, engage in agricultural practices, which is seasonal. Their income don't come as scheduled, probably after 3 or 4 months. You need to be able to formalize that. And having such technology available allows you to plan for them to pay either through a rental scheme or even a home ownership scheme. There's a lot of contributory schemes in the informal sector, neighbors running contributory schemes with no interest whatsoever. So you can plug that into technology. However, with what we're doing with the blended finance, it is an opportunity for us to introduce interest rate subsidies. Obviously, if we strategically structure and layer these funds, we're able to give interest rate subsidies, we're able to give credit guarantees, we're able to carry out infrastructure grants. So we segment the funds according to needs, according to phases, and that way first losses are taken care of, and burden of repayment and cost of capital is not transferred to the intended beneficiaries. Thank you.
Thanks. There was a question at the front. Araba, you had a question?
Hi everyone. Glen touched on my question. I was just wondering, as a developer and real estate company, the scheme concerning return on investments, especially when talking about internally displaced persons. So, I mean, I think it was partially answered, but I still, have more questions about it. Thank you.
Who wants to tackle the question on return on investment?
I'll give a go. So what we're trying to do in our concept note is to see how the developers can exit early, and the fund is able to take that risk, and the repayment is structured in a way that using technology repayment. Also, I mentioned earlier, we are pushing for a lot of policy reforms, tax reliefs and all that, so that it is attractive for developers, tax holidays and such incentives, so that they can grant moratoriums and holidays for repayment. So for developers, the opportunity is there. Obviously, the government can come in and give certain incentives. You don't have to concern yourself about occupancy. And critically, again, one thing we're doing, we intend to do is to use housing as an integration tool for displaced persons, to relocate them and reintegrate them into the society. We don't want to build slums after slums. We want to build sustainable communities. So thank you.
Thank you. I'm being told our time is up. Can we take one more question? Any pressing question?
Thank you for this precious opportunity. Yeah, mine goes to Glen. You have talked about linking data and IDPs. The main problem, or one of the challenges we are facing with IDPs is different kind of background. And we know that one of the problems we're having in terms of data is overlapping, cost, and all those kind of things related to that. So initially, what sort of plan, strategy do you have to address those challenges? Because if you don't have a standard way of addressing the problem, it becomes difficult. Thank you.
Absolutely. And again, that's an extreme example of the lack of data in the informal systems. So it's just an extreme example. for an IDP, because an IDP we know has come from somewhere else, so there's definitely no data, whereas most of the time in the informal sector, there's a severe lack of data in any event. So the question then is how can we mitigate the risk in the best possible way in going forward? So one of the issues around that is what is the alternatives? So if we're going to invest in infrastructure, what are the alternatives if that person can't comply? How do we manage that? What is the process to manage that? How do you manage that going forward? So in a traditional model, that would be on a basis of, for example, analyzing the pipeline, so that if somebody doesn't perform, that you can move them out and somebody else can move in. And so from a developer stroke finance perspective, you're covered going forward. In this case, obviously, it's slightly different, and that's to the point, the family home sciences, how do we mitigate that risk? What guarantees, what first losses do you put in place, etc. So that's then looking at the risk going forward, because we can't pretend that we're going to get that data. It's not going to happen. So, but how can we start and support that individual building that data? Because that's a key part too, going forward. And how do we empower them with their own data so that going forward they have that? I mean, I immigrated country, and 25 years of my payments were completely ignored in the next country. So you start from scratch. And it's this, how can we support, particularly at this level, for people who are IDPs, internally displaced, or even move, how can we support them? Because if they're paying regularly, they're good customers, they're good paying customers, how can we support that in demonstrating that so that they've got a passport with them, a financial passport, if you like, that empowers them to go and be able to raise funding going forward into more traditional financial institutions. So it's about looking forward as opposed to backwards. So because the backwards doesn't exist. So let's acknowledge that. That's reality. So let's not pretend. How do we then deal with it? And that's to the point of how we put that in place, how we manage it, how we build that data, and how do we support that going forward.
Okay, thank you. Time is done. So feel free to seek out the speakers during the break. Thank you so much.
Let's appreciate the panel.